Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Wednesday, the 19th of May, a pretty wild trading day and everything, 2021 at 6:40 p.m. Central Time. So if you've taken my enhanced Bollinger Band course, you should be applauding like this. If you trade the gold market and you put in the order at that moving average we talk about and you played for the upside, it all occurred. A monster good trade, big one. $2,000 plus. Not every trade wins. Today, in that same course, you would have lost 200 on the Canadian and been out of the market. But I'll take those type of ratios. They don't always win. Nothing always wins. But the point is, that's turned out to be an interesting facet of the market. I'll show you that in a minute. In the stock market, we caved in today. In fact, we have been caving in the commodity market as a whole over the past week. Think about the grains when they peaked out and came crashing down. Copper was just nearly 480. Now it's 456. It's come all the way back. I was just on Bloomberg, BNN TV in Canada yesterday saying 475 looked high to me. I think you can get back 450s, 460s. Boom, I didn't expect it that fast. Wish I could have been short, but that was what I expected. Currency markets, they're the stable ones. You get losing trades, nothing walks on water, but that's what's going on. You're not getting a crashing of interest rates soaring through the 174 level. And what the market's done is it's repricing some of the runaway markets that we had. Be it crude that just got up to 70 and a quarter in the Brent, back to the 66 and a half zone. It's market after market that has done it. You deal with this at times, and then you come back and the market gets through and there's other phases. If we look at gold, once it got over that 18-week average, normally it comes back and challenges it. It didn't. It's almost like this time when it got back under it and it just kept going in that direction. Interesting, and it's decided to be, if you will, directional this time. Now, you have a big outside day up today. So when I look at that, what don't I want to see happen? I don't want to see today's low of 1850-220 taken out either on Thursday or Friday. If so, if that happens, it's likely that you're going to get a good-sized correction in the market, carrying the market possibly back down to some key moving averages. So that is the swing line low now. The swing line is back to the pattern of higher lows, higher highs. The 18-day average is all the way down here. Under that, if the market if it gets under that, it'd be another $30 break. So be careful. That's the number I wouldn't want to see. On the break today, if you were a buyer, what do you do the first time you hit a Bollinger Band? Away you go. Where was the band today? 1881.50. I'm not going to tell you where the buy number was. If you took the course, you know where it was. It's staring you in the face coming in, and away you went, and it was good. I even had a client tell me, he caught me. I was wrong. I had the wrong print. I made a mistype in the gold, and it's about 6:30 in the morning or so, 7. I put out a special update so the clients wanted to get everything straight. Probably had one too many wines last night. I don't know. I just don't know. I'm teasing about the wines, but I just don't know. I had a typo there, and I was off $10. He caught it, put it in. Thank you. You helped everybody. In the gold and the slow stochastic, as long as you stay embedded, I think the pros are going to keep buying these pullbacks. They'll get out if you get a reading under 79. Barring that, they'll look again for a challenge of that upper Bollinger Band. Gold-silver ratio, take a look at the number it keeps fighting at. It's fighting right at this key 18-day average of closes, and while silver's not as pretty a chart, it's not getting hurt either. The silver market never did embed, it's just overbought. The pattern that it has is one of a lower low, higher high. The past, well, let's get here. What do I tell you the first time you hit that band? And I know people want to say it's going to keep going. You'll be right one time, maybe two, but you're going to be wrong those 8 or 9 the other. And it's not that you should be going short. It's just I think you can buy if you want on a better condition. And the market here hits it again, pulls back, and now you're getting that pain, if you will, of not getting out in time. And that's what trading is about. I hope you appreciate what I'm saying. It's about taking a part of the market. You're not going to catch the bottom. You're not going to catch the top. You can do this on weekly basis, daily basis. The risks change because on a weekly chart, you're looking at bigger time frames. In the copper market, am I surprised? No. But it took a while. Remember, we had lost the embedded reading right here, and I said, if I'm right, the market's going to make a run for the 18-day average. It shouldn't get over the most recent high. I started questioning myself. I'm going, boy, it's not breaking as fast as I'd like to see it do it. This is the day that I started scratching my head going, I don't know if it's going to make it. And then all of a sudden, as luck has it, market pulls right back to the 18-day average, and you can see what it's doing. Copper is in a short-term downtrend. The objective, if it wants to further wash out, is the 440.5 level. The near-term resistance is 461 in that market. In the platinum, you don't know anything else. You're looking at the setup from yesterday, downtrend, lower highs, lower lows. Potential target, the lower Bollinger Band. Went right to it, stopped. If it drops again, the combination of the 100-day average and that. The market is not saying buy me. It is saying cover some shorts, because if that covers shorts, that's what to me it's saying, because you're oversold. In the palladium market, I don't see a trend. I see a market that is still spinning around with a higher high, lower low. It hit the lower band here, it bounced back up. It hit it today, trying to give you a little bounce in it. In the dollar index, the market is in a downtrend, but it is oversold. Oversold to me is not an area that I would tell my clientele to sell on. You got the lower highs, lower lows. What do you do when you hit a Bollinger Band? You hit it yesterday. So if you put on new shorts and any technique that you're using, that was the cover, and today you're getting the bounce. Resistance should be back up towards the 90-60 level should it want to go there. I need it to work out of it being oversold by either embedding or giving a rally of some type to get rid of that situation. Ethereum, we had talked about losing the embedded readings back here, and then the downtrend kicked in all at one time. You'd already had lower highs, lower lows. I can show you that even so you can see it crystal clear right here. Lower highs, lower lows. Therefore, the swing line is down, but you were closing over the 18-day average of closes. So bias is up, momentum pointing down. Market stalls out there. Now if you take out this level right here, that would give you a further reactionary low, and I didn't expect this today, but it got pretty darn close to that lower band. You might even go in and hit it before you know what's done. But look at how oversold it is. Now, if you don't think this is risk, you've just taken this market down 50% in price. So in 7 days, kaboom. So you want to learn things? Well, that's what I'm here to do, to talk to you each night, tell you what I'm seeing, bigger trade trends, and in the morning when I get up and I do my subscriber videos, that's where I'm saying buy here, sell there. I hang myself out there. I will lose and I will win. It's going to go both ways. But if you take this course that you're going to see right now, I promise you're going to learn some things that I just discovered. I doubt that you knew them. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.